Hi, my name is Taylor Moffat of Hallidine, and I'm here today to talk about what are some of the different levels of taking your company public. There are different markets, gray sheets, pink sheets, bulletin boards, listings on exchanges, and we have clients asking questions about what are these different levels. I don't understand what it all means. Basically, if a company is publicly traded, and it's not listed on an exchange. An exchange is like a private country club where there are standards and the riffraff can't get in. Um, Exchanges are the best place to be listed. You could list yourself on a GXG exchange, a Frankfurt exchange, Amex, NASDAQ, New York Stock Exchange. But if a company is not listed on one of these exchanges, it can trade on what's called the bulletin boards. It doesn't mean that there's a literal cork bulletin board and some guy sticking notes up there, but it's basically part of the Nasdaq system where it trades electronically and silently, but through computers. But the bulletin boards, as they're called, are fully reporting. There's another part of that called the pink sheets. It's used to be called the pink sheets. Now they're calling it the OTC markets. And there are various levels of that now. And I am not an expert in pink sheet stuff, nor do I care to be. But if a company is in the pink sheets, there is a top tier OTC pink current, which means that the company is voluntarily filing reports. And this is basically the top of the bottom of the barrel so far as the stock market is concerned. OTC pink current. And I have nothing against the individuals running OTC markets. I think they're great people and they're making a lot of strides to clean things up, and I applaud them for the changes they've made. But there's still a lot of room to go. Below that, we have a few different levels of pink reporting, and they assign a yield sign when a company gets behind on their filings, and then they assign a skull and crossbones, and they call it caveat emptor status. And then they've got a one below that where a company doesn't even have market makers, and nobody's there making a market, and it's not DTC eligible, and that's called the gray sheets. But at any rate, I think that anything that's pink sheets or below is the bottom of the barrel, and I do not recommend it for any of our clients. The only way I would recommend any of that for one of our clients is if they somehow got a hold of a shell for free and it was just given to them. It might be something of value. Beyond that, above, when we get into the bulletin boards, a lot of offshore companies, like maybe companies from Denmark or wherever, that want to trade in the United States, they may list in the pink sheets just because they don't have Sarbanes-Oxley compliance. The level of compliance and accounting standards is so high in the United States that a lot of foreign companies just don't qualify. So that's sometimes you see a company like Merck, which trades in the pink sheets. It's a good, reputable company, but it's just in the pink sheets because their accounting isn't the same as what Sarbanes-Oxley requirements are going to be for a company that's on the bulletin board. Fully reporting company here in the U.S. If a company's on the bulletin board, remember that's like it's a good fully reporting company, but it just doesn't have a membership in that country club. You can get some of the smaller, newer exchanges like the GXG, which I believe may be the exchange of the future, and I believe it's going to be growing. Simon Kira-Watson's doing a great job over there. Hi, Simon. Great having lunch with you when I was in London. But I also think there are some other good exchanges too. The Frankfurt exchange is a good exchange, not to be confused with the Berlin exchange. But the Frankfurt exchange has tons of trading volume. We love the Frankfurt exchange. We like the GXG exchange. A little more popular, you're looking at the NASDAQ and the Amex here in the U.S. We're not really big fans of the London exchange. I don't see it as growing. The GXG is actually based in Denmark, but it's kind of having all the action in London right now. Kind of confusing, but at any rate, I like the GXG better than the London Exchange because it will grow. And the London Exchange is completely stagnant. And when I was last over there talking with other investment bankers, it just seems that everybody is kind of discouraged about the volume that is there, or I should say it's not there. And I think we could look at listing your company somewhere where it's likely to grow in popularity, like an up and coming exchange rather than a has been. Um, in the United States, the top exchange is the New York Stock Exchange because they have the most difficult listing requirements. The company has to be older and more established, which is why a lot of the .coms and things kind of gravitated towards the NASDAQ, because the NASDAQ would allow these younger, newer companies to be able to get listed. So the higher the ticket on your country club membership, the more prestigious it is for your company, and ideally the more trading volume you're going to have. So the more reporting you provide, the more requirements you meet, the more potential investors you can attract, and the more trading volume you're going to have, and the more liquidity thus for your stock. So we do recommend that you list on the best exchange that you can qualify for. And we'll talk about how do I know which exchange is best in the next video.